That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
It's really important stuff that we cover here on Talking Real Money. I'm Don. That's Tom. You can give us a call at 855-935-TALK, and we'll make Taylor over there send you a book.
Yeah, he's back there printing them up right now on the Como copier. It's very kind of him. Saves us a couple bucks and get them done right away. So I kind of like it.
So give us a call. We'd love to help you out with those nagging money issues that make you crazy, like we're going to do right now, right off the bat with Sherry. Welcome to Talking Real Money, Sherry.
Hi.
Hey.
What's up?
So I have a question. My father recently passed away, and he left my sister and I a chunk of change as well as a home. And there is a trust set up, so all of the stuff was in the trust. We just recently sold that home, and so right now I have all that cash because the home was completely paid for. So I have all that cash just sitting in a savings account at the moment.
Making
what
no
I really
money.
would like to do. Well, it just happened on Friday, so. Got me a little slack.
That's all right.
We're going to cut you a little slack there. Yeah,
it's just that we had mentioned that in the last hour. I'm going,
Go ahead, Sherry.
So what I really would like to do, my sister nor I really have any interest in dissolving the trust. My father was a very giving man. We would help our family and our friends by, doing little personal loans and helping them get back on their feet, that kind of thing. We kind of want to carry on that goodwill, if you will. So we don't really want to liquidate the trust by any stretch. We would really like to keep the money in the trust. What I really want to know is, can I take that money and invest it in some stocks and bonds or combination thereof with the trust EIN number rather than it having to go to either one of the two of us?
It depends. Was the house in the trust?
Yes.
And the house was sold by the trust?
Yes.
And the money has not been distributed by the trust to you?
Correct.
Then it should be under the trust. It should be under the trust tax ID.
But yes, in this moment, but again, it's going to depend on what the trust says about the disposition of those assets over time. That's the part that we don't know without reading the trust.
Right, but what I'm saying is just based on what she said, it sounds like the money is currently in the trust. The trust has not distributed it. Therefore, it as long as there was no clause in the trust that required it to be distributed on sale, and this is something you need to talk to your trustee or your attorney about.
Bingo.
But as long as it sounds to me like you should be able to invest, or the trustee technically should be able to invest within the trust. And
are you
keep
and
it
your
under
sister
that
the
trust tax
trustees in the trust now? On the trust?
We are co-successor trustees, correct?
So
and all of that money is still under the trust EIN number. And what we don't want to, first off, we don't want to have a huge tax event, right? So we don't want to take that money ourselves, divvy it up now and then invest it individually, which we could, but neither one of us really have any interest in doing that. We would like to have the trust grow as its own trust. And I just didn't know if I could go down and invest with that trust EIN number or if it was going to require a personal Social Security number.
My guess is that, and this is, we're neither of us attorneys, but we've dealt with things like this in the past. It sounds to me at first glance, without looking at the trust, that you could probably leave it in the trust and invest in the trust. I'm pretty sure, but again, without reading the trust, you can't know for absolute certainty, and that's why God invented lawyers. 855-935-TOM.
Well, I'm going to let him say that, but sure. I thought it was just for the arguments over the dinner table, but all right.
It's for the great jokes.
Yeah, thank you. Yeah, I'm not supposed to do those anymore with two lawyers in the family.
Did your brother and sister?
Yeah,
he got mad at you for lawyer jokes?
Yep. Told me don't do those anymore. So.
Oh, too sensitive. You guys are you the thick-skinned member of the family?
Let's just not open that can of beans. I would take the trust to the person that wrote the trust and say, here's what we want to do. Is that okay?
Yeah.
That's what I would do. And by the way, back to the tax part.
He's a very practical guy.
You're going to get the basis of those assets goes up to the day of death of your father. So if he recently passed away, the value of the time of his death, that's going to be the basis. The only if you have a lot of gains after that, you would pay tax on it, but otherwise there wouldn't be any tax on it. So important consideration. Sherry, thank you for the question.
Sherry.
Yeah, good luck to you.
855-935-8255. That spells talk there at the very end. Get a book and get answers to your questions as best we can give them. Again, we're not lawyers, but we're certainly not doctors. We wouldn't even try to help you with health stuff. Give us a call, 855-935-TALK.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
Yeah, indeed we are. 855-935-TALK is our phone number, 855-935-8255. During the break, I was just going through some medical bills.
I see that, yeah.
Medical bills are fascinating. Whenever I get one of these, it's like, here's a bill for my wife. Total charges, $1,994. Whew! Insurance paid.
Yeah.
$406.89.
That sounds bad, like you're going to have to write a big check yourself.
No, because I have insurance, they adjust.
Right.
This is why it's so sad to be an uninsured person in America. If I was uninsured, I would pay $1,994, but because I have insurance, they write off $1,565, leaving me with $21 to pay.
That sounds a whole lot better.
Can you believe they write off 15?
Did she did Debbie did she find her way back from Virginia? Is she back in Florida, or I didn't know.
Do you think I left her in Virginia?
I didn't know.
You
how
saw
this all
her in
worked
Seattle.
out. I know. That's the last time anyone's seen her.
When we went for the funeral.
Yeah.
No, she's hiding somewhere in the house, I think.
Just checking.
Yeah. Okay. 855-935-TALK. Give us a call. We'll help you manage money and give you a book to help you manage money better, too.
Don will pay your medical bills if they're only $20.
Well, as long as, $21.34. I got to pay that one.
Good deal.
Jim, you're up next. Welcome to Talking Real Money.
Hello, Jim. Jim? We lost Jim.
It's
the phone loser day. We've had this happen. I think it's the cheese and ham thing, ham and cheese thing. By the way, the same guys who are working on that are working on another fund for French wine, which I find to be. Is he back? Which I find to be much. I'd rather invest in French wine than
the French
Italian
wine fund,
ham and cheese. That's just me.
I actually think these all go together nicely.
That's true.
The wine and ham and cheese fund.
If I get a 6% safe yield, no problem. Count me in. 6% safe yield.
I don't even know how you get a yield out of cheese. It doesn't pay dividends. There's no interest.
Depends on which way you shave it. That's all.
Okay.
I think we lost Jim. I think Jim's gone.
So,
Jim
we're fine.
tries
we're fine.
back. No, we're fine.
They'll call back. We'll get it all fixed. We'll fix some. We'll figure this out. Hey,
yes.
The other thing I wanted to talk about was something you brought up. You brought up during our last classes that we did a couple weeks ago.
Yes.
Remember we did the classes?
Seems a long time ago, but I do remember, yes. I do.
Retirement classes. They were the roadmap. They were really good.
Well, they were good.
But you right before the first class, Vanguard regularly creates these reports, these studies.
They study the value of advisor. If you hire an advisor, what does it meant?
Yeah.
Yeah. It's fascinating.
Yeah. And I always thought that an advisor, they help some, but I never really believed they actually made you money.
Yeah, because you're
made
paying
you
them.
more money.
You're paying them.
Right.
It seems like, no, you just end up with less. And Vanguard is the, kind of the king at do-it-yourselfers, right? I mean, they built the whole do-it-yourself industry.
Well, and that was one of the things that surprised me is that they said an advisor, having a fiduciary advisor, always a fiduciary, not commissioned advisor.
Not sometimes fiduciary and sometimes broker-dealer. It's 100%.
That an advisor like that can make you, get this, here's the number, up to 3% more per year.
And the more fascinating, that's a lot. We were just talking about if you could add 1 or 1.5 a year. And the more fascinating part is digging into that and seeing where the value comes from. Some of it is from building a correct portfolio, because very few people really
rebalancing that
kind of stuff, kind of the actual management of the money,
keeping fees low in the funds.
Half comes from fixing or keeping your behavior from making from allowing you to do bad things to yourself and to your money. Shocking.
So actually, the best value an advisor brings is the psychological.
I know. Yeah.
It's the hand-holding.
Vanguard's own study. Yeah, I agree. That's it. But it was surprising. We have to admit that.
I didn't think it was that high.
I mean, it was
hand-holding is something you don't get in this industry. I mean, think about it. You deal with your broker. Now, come on. Does your broker pick up the phone and call and say, "Oh man, that was a terrible market. Here's what we want you to do"? Nothing. No. We don't want you to do anything. No, they call you and they go, "That was a terrible market.
And
maybe we should get out of those and get into these."
Yeah, that was a bad fund. Let's move over to here. Yeah,
I got a better one.
And we know
found
that
a better one
is definitely
didn't you
a recipe
recommend the other
for
one?
disaster. Yeah, for what?
Well, no, your broker, they call you and they go, I'm gonna get you in a better fund. Well, wait, did you invest me in this bad one?
Yeah.
But anyway, that's the most interesting thing, and it makes really, really good sense. It does. It's a common sense kind of thing, because we behave badly due to our emotions.
What is it? Food, sex, and money. It's about the emotions, not about the intellect.
It's not. And it's funny, even Paul Merriman, whom
been
in this
criticized earlier, I'll tell him. It's his birthday next week. I'm going to tell him you did that. So
no, I just said that sometimes Paul likes the riskier directions.
You're going to be all
think about it.
Back now, huh? Okay.
He came to my house to try to pitch me on market timing.
That was a long time ago.
It was a very long time ago. Yeah. He was young then.
Okay, all right, whatever.
So
what
was
are you gonna
I.
Say? Yeah, that's true. What are you going to say about Paul? What about him?
Oh, I was going to say he has an advisor.
Yes, he does.
And he is an advisor.
Yeah, he admits it. He says, I need
because he knows he'd go crazy.
I know. I thought that's very interesting. He hasn't talked about it much lately, so.
Probably fired the advisor then.
No, he has the same advisor. I happen to know who it is.
Well, if he hasn't talked, I'm just worried if he hadn't talked about it that maybe.
And by the way, Paul will be at Retire Meet 2020 for those of you planning ahead. February 22nd, 2020. So put that on your calendar.
Put it on your calendar, but it's not on the web yet.
What? You can't sell tickets to that? I was counting on that to fund my holiday thing. Okay.
Because we want people to go to Barb's classes.
Oh, that's right. Those are in early November. So I'm only laughing because they don't get the attention they deserve. That's all.
And the other thing is that Retire Meet, we usually don't have everything all planned as well as we do this early.
This is very early.
We really actually have it all together this year, where we're doing it a different way.
Different place.
Mm-hmm. It's going to be a lot easier because we found a lot of people by the end of the day were going, can I go home now?
Yeah, it's done.
Well, it was a long day, so we're redoing it and compressing and tweaking, and we're going to be able to have more people, and it'll be a lot of fun.
5 words this year. 5.
Which is 3 more than you deserve.
Well, probably true, but still, like you said, you own the microphone. I should have got more,
morning.
But okay.
You own the microphone. No,
I know. What you said earlier, I get to say what I like because I own the microphone.
We're actually renting the microphone.
Yeah, that's true. Anyway, so that is next February. Something to look forward to.
I want to give out a phone number now.
Go ahead, please do.
855-935-TALK, 855-935-8255. We've still got more than an hour to get you in, and if you call and ask a question on the air, you get a free copy of my book, Financial Physics. everything you need to know about investing in just one relatively thin book. You don't need to know more than that. Give us a call.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
While we were in the break, the phone rang. It was Paul Merriman, and Paul said, Don's talking about me and market timing. Ask him about the Janus funds. What is he referring to there? I don't know what that meant. He said, then you ask him about the Janus funds.
Nice setup.
Yeah.
That was one of your better ones.
Thank you. I'll be here all weekend.
Pretty good. Yeah. You know, there was a time.
Yeah?
This is a little story. There was a time not so long ago, or so it seems when you get old, because it goes really fast. Oh, by the way, I have an aside to that. It's so funny. It's not that funny. You know how as you get older, time slows. It's like whoa, man, wow.
Fewer days, yeah, right. Yeah.
Just
more days.
Well,
yeah.
We have a friend here in town, and they came by the house, and of course, my wife and this little girl's mom get to talking. And the last time they got together, they talked for 3 hours. And they said, it seems like mere minutes that we talked. And I looked at the little girl who's like 7, and I said, I bet it felt like forever to you.
And what did she say?
She went, uh-huh.
Oh, yeah. Can I go home now?
You know, as a percentage of your life, that 3 hours was huge.
25% or something. Yeah. All right.
Yeah, it's
anyway.
like 25%. Anyway, so way back in the day when I was just a fledgling talk show host with a nationally syndicated show on money. I was a big believer in do-it-yourself investing, no-load investing, but I had not gotten the religion of Gene Fama and Ken French and all
indexing
and passive investing. I had not gotten it yet, nor had Paul, by the way.
Well, that's true. So he's going to call again, but he's going to anyway. But so
So I suggested funds like American Century Funds, which used to be called 20th Century.
Fidelity, Magellan.
Fidelity, no. Magellan, no, I never suggest. Fidelity Contra, Invesco, which is now Oppenheimer. And, it's funny, all these funds that I suggested back in the day, almost all of them are now loaded funds. They've fallen on their faces. But I suggested them because in the day, there wasn't the evidence that there is now that active investing can't win.
Active investing is having a manager who's picking stocks. Or moving money around in markets depending on what's going on, that kind of thing. Versus,
so I've evolved, and I want to apologize for my lack of early evolution, mutation.
Yeah. So one of the fund families you liked was Janus.
Yeah, because they were hot back in the day.
Ridiculously hot. So somebody came in the office yesterday and said, well, what about Janus? So they brought me in because I'm the old guy and I remember. I was like, Janus really truly, I remember back in the day, Janus truly is the poster child, if you think about it, for active stock management because they were in the right sector in the late 90s. At
the right time.
Technology. They went all the way up to $200 billion under management in 2000. That's a lot of money in 2000. I mean, it's a lot of money anytime. It's a lot of money. I remember, this is a true story, they had to hire more people to open all the checks coming into, they didn't have enough people to get all the money in. And then what happened? Technology went kapoof. They owned 41 million shares, it turned out, of a particular techie kind of energy firm called Enron. They were in tech, and they
owned Enron.
They owned a lot of it, and they were also very concentrated in a few stocks across all of their funds. I think they had 4 or 5 funds, right? You thought you were getting something different because you're in the Janus Global. No, it was all the same. And so when the tech thing went down, they went down hard. So by 2018, that $200 billion down to $30 billion.
Wow, under management?
Under management. That's how. And
then how little attention
they combined with the British firm. I think it's Henderson. Anyway, so if you believe in an active mutual fund or active manager, I would go look at that case to say, this is what happens. People have what they think are great ideas. They might work for a bit, but they regress to the mean, and in this case, boy, they come crashing down. I think one of the funds lost 84% in 1 year. It was that bad.
Yeah, the Janus, what used to be the Janus 20 fund, I think, is now the Janus 40 fund. At least they made it twice as big.
Exactly.
But, man, that thing has been all over the place. Wild years, terrible years, really, really volatile, and with high expenses, about 0.8%. Give us a call, 855-935-TALK is the number. We actually still have an hour left because we're going into bonus time. So stop in.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
855-935-8255 is our telephone number. By the way, that telephone number is good 24 hours a day, 7 days a week.
Don's
if you don't
waiting
call during
out.
the show,
Yeah?
you can call anytime, and I'll answer those questions on the podcast.
Oh, I thought you'd, answer the phone anytime.
No.
Come on. I want one of those big,
I don't even
lights in
have
your
a
room.
landline anymore. All I have is my iPhone.
So I want to finish the thought on Janus because you said the Janus 20 is now the Janus 40. Just for sake of comparison.
like it.
Just for comparison.
Okay.
You could, for example, own the Vanguard Total World Stock Index, which holds 8,800, almost 9,000 stocks.
Right.
Yeah.
Yes,
or
it does.
if you hired an advisor who used dimensional funds, you could have a portfolio with 13,000 companies in it. So to sort of suggest that 40 stocks is somehow diversified, nah, that doesn't work.
Yeah. And I just checked. it. There are actually 39 stocks and one other. I'm not sure what the other is.
I don't want to know.
What could the other be? Well, let's go look.
Non-traded REIT of some kind, or
is. Maybe it's this ADR. Maybe they don't count that as a stock. But it's really interesting. Whereas Janus 20 was focused in a number of big tech companies.
Oh, yeah.
Janus 40, what's the number one holding in Janus 40, would you guess?
I'll go with, shockingly, Amazon.
No, it's number 3.
Oh,
But you were close.
I'll go with, I know this will, Alphabet.
Alphabet. No, number 5.
Oh, well, I've got 2 out of the top 5. I feel pretty good.
Who are the 2 richest men in America?
Then in that case, Microsoft?
Yes, Microsoft.
Okay.
Yeah, Microsoft, Amazon,
Yeah.
Walt Disney,
okay, you know
Alphabet.
What? These are... you could own those in a thing called the
Netflix,
Vanguard
PayPal.
500. I mean, that's...
Adobe.
You basically own that in the Vanguard 500. Basically.
Right, but see there, if you look at their portfolio, though, they are overemphasizing everything that's currently hot. Think about it.
Right.
Microsoft, hot.
Yep.
Amazon, hot.
Yep. All the
Disney,
things.
hot.
Sure.
Alphabet, hot. Facebook, Adobe, Netflix.
It's
They do have Boeing.
closet indexing. Really,
Yeah,
at the end of the day.
It's a baby index.
Yeah, I mean, it's like you kind of own all those large U.S. firms that have done great the last year.
Well, although they do have that, they have that one ADR, which is an American Depository Receipt.
You might want to explain what that is.
And one of the ways that foreign stocks
Right.
can trade in the U.S.
Correct.
is if they deposit shares with a bank in the United
You don't need
States.
to buy things that way anymore.
They created ADR. This is the old days. This is the way they used to do things in
what's
the
wrong?
old
They couldn't
days.
get in a unit investment trust or something? I mean, come on.
Yeah, even a UIT.
yeah.
A UIT is older than an ADR.
Yeah, exactly. You don't need those things.
Alibaba. They have Alibaba.
Is he still around? Okay.
Alibaba.
That's all right.
And the 40 Thieves.
Yeah, I mean, it's just when I hear stuff, it really drives me nuts. So, and by the way, one thing we forgot to conclude the conversation about Janus, they hired the most famous bond trader in history, the guy who was called like the Bond King. Do you remember that 3 or 4 years ago?
Yeah, Bill Gross.
Bill Gross. And how did that all work out?
It hasn't.
He's done. I think he's retiring. He's just
I think
sit around and hassle his ex-wife and kids now full time.
It points out the thing that we keep saying. Yes, sometimes people outperform, and they outperform dramatically and apparently brilliantly.
Yep.
But it is as likely as not that it is based on luck.
Yep. And his track record, Gross's track record, Janice, I don't think it was very good.
It was terrible. 855-935-TALK. Give us a call, get a book, and an answer to your question. And Carl did just that. Carl, welcome to Talking Real Money.
Hello, Carl.
Good afternoon. How y'all?
Oh, we're doing great.
First of all, I totally agree with your view of keeping money in a bank is dumb. I tell my friends they need to get a HELOC, use that as their cash reserve. HELOC is one of the cheaper ways you can borrow short-term money and get on with life. Anyway, my real question is, I've gotten involved with an outfit, and I don't know if I should mention a name.
Go ahead.
We don't care.
It's Caliber. They're down in Phoenix. They essentially, it's not a money market. It takes about 10 days to get your money out of it. But they're paying 8.5%.
No!
Not bad.
No, run away. 8.5%, really? No.
Yeah, they really do. Check them out.
Oh, no, I'm not going to check. Don will check them out, but we're
I'm
not
checking them out right now.
Not for the purposes of investing.
Let me tell you what it sounds
it's not
vaguely like.
It's a place where you're putting your cash that you haven't invested.
Carl, hang on with us through the break. We'll come back.
Oh, man, Carl, I am just checking this little thing out, and it really, really smells.
I'm holding my nose right now.
855-935-TALK is our phone number, 855-935-8255. Oh, my gosh. You remember, what was that Woodbridge thing? This may not be it's probably on the up and up.
Tom and Don are talking real money.
And there is a great opportunity. If you are a female investor or a female who thinks you should be investing, you need to join, or a woman, you need to join our very own Barb Devereaux, who has a terrific class called Female Financial Fundamentals. Tom's having too much fun with this. Well, because I was trying to get the whole female thing in here. This is going to be a terrible commercial for her class now.
I think you can safely say it's already been a terrible commercial. Listen, here's a reality, okay? Barb Devereaux is a very smart person. Barb Devereaux has lived through a lot of the things she talks about, and Barb Devereaux is a terrific speaker. She really is. And she's going to do 2 classes in November. Sign up for one of them. There you go. How's that?
But the one I was going to talk about is Female Financial Fundamentals, because we're doing the alliteration thing. So now you messed it all up. So go get your tickets. It's a lunch ed thing, and it'll be fun. Get your tickets at TalkingRealMoney.com.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Welcome back to Talking Real Money. Our telephone number, 855-935-TALK, 855-935-8255. And we're going to give you a free copy of Don's book as well. We're talking with Carl, who wanted to talk about Caliber. I will finish the thought that Carl had actually about HELOCs. Because he said, instead of having money in banks, you could have a HELOC, which you could then, if you had an emergency, go borrow. That's a pretty good strategy, actually. And as well, I think sometimes if you're getting closer to retirement, you could, while you still have the income, you could go set up the HELOC. So again, that's there if you needed cash. You could go take it out of your real estate equity, which is another problem I see. Another issue oftentimes when people say, I'm going to pay off my house and have but then you've paid that off and you have nothing liquid to pay the bills. So anyway, then he was bringing up his easy 8.5% at Caliber. Don?
Carl, did you actually you believe that they told you that was a safe return?
No, there's risk involved. They essentially do development and construction loans, so they're dealing hard money, and I understand that.
This is okay.
Life is
it's
trade-offs.
high risk.
I mean, hell, I own Altria too, which is paying 7-8% now, which is not all that bad. And I don't think Sin, is ever going to go. Sin is never going to go up. That's Philip Morris USA.
Yeah.
Okay. Sin is not going to go away.
Altria will probably, may go up in smoke. Never
burn,
know.
Baby, burn. Okay.
As long as
I'm
I
saying
just
it won't,
want,
but hey, it's my money, right?
There you go.
Exactly. But Carl, this is the kind of stuff that we would never in a billion years suggest to our investors or our audience, because the risks are unknowable. They're ridiculously high. I'm looking at like one of their funds, the Caliber Distressed Real Estate Income Fund. It says income producing real estate purchased below market value. It says in the name, distressed. Real estate can go away. Real estate is not safe, and I don't want to fool anybody. And by the way, this is only for, quote, qualified investors.
And where's the custodian who's holding the money?
Investors.
Or they're taking it in and then investing it in these properties?
They're taking it in. I don't believe there is a custodian.
Okay, so, I mean, in my mind, if you want to own real estate, then you own, again, this is us, Carl. You can do it anyway. As you said, it's your money. But we would own a real estate investment trust mutual fund. Vanguard's got a very fine one. It's made about 20% this year. It doesn't every year.
Diversified. It's a lot safer than this.
And you could get the money tomorrow if you needed it. You couldn't get it out of Caliber. I mean, that's my other issue always. So
it's not as much fun as owning real estate personally, because then you get to go deal with the real world.
Exactly. No, you're right. No, it's not as much fun. It's boring. So I get it.
Anyway.
Yeah.
Well, hey, I agree with you. I think your analysis is correct. This is not serious money. It's under 100K. It's just some money sitting there. What the hell? But 8 points is interesting, and they've done it for a year. Will they do it for 10 years? I wouldn't bet on that.
Who knows?
No,
and
you are.
You're right. I agree.
And you are betting on that.
Yeah,
Of course I am.
Yeah.
Yep.
It's a big risk. Thanks for the call, Carl.
Thank you so much. Have a great weekend.
Yeah.
Take care, sir.
You could make serious money, but you could lose
serious money. And the thing about a real estate investment trust fund, like the
mutual
Vanguard,
fund,
Vanguard Real Estate Index, is that it owns a diverse portfolio of real estate. Over the last 10 years, its average annual return has been 13.5%.
That's good run.
Over the past 15 years, it's been 9%.
Yeah, and
so he's saying he's getting 8.5%, but this is with lower risk. And I guarantee you, I don't know what the fee structure is like, but it's probably close to 10 to 15%, probably closer to 15% that they take. 15% off the top.
Good Lord.
Vanguard takes 0.12.
12 basis points? That's what their read is?
Yeah.
Wow, that's cheap.
0.12 compared to 15.00.
Yeah, it's quite a difference.
You do the math.
Well, there's no comparison between the risk. Did he say something about Phoenix in there too?
It's in Phoenix. The thing is in Phoenix.
Come on,
it's in
a
Arizona.
Real estate deal
it's
in
Phoenix. It's almost all Arizona real estate.
What was wrong with Florida? They closed that week or something?
We try to.
That's
and by the
silly.
way, the Vanguard product, the Vanguard Real Estate Trust. Listen to some of these names in here. Simon Property. They own malls all over the world.
Right. Yeah.
Public Storage. They own Public Storage. Realty Income Trust. It's huge. Weyerhaeuser, for heaven's sake.
Big player.
They own a lot of real estate.
Yep.
This is well diversified.
It's the difference between owning an asset class, a group of stocks, companies that have similar characteristics, versus trying to pick the distressed property that will make you 10% but not lose you all your money.
Right. So
it's just
that's why.
By the way, can we run to a quick call before we go?
We have 3 minutes.
Okay, let's go back to the phones. Bob joins us. Hi, Bob.
Hi.
Hey.
I have a quick question for you. Looking at appreciated stock, is it reasonable to donate that to a university, for example, in the form of a charitable gift annuity?
Sure.
Just interested in your opinion.
Yeah, I mean, I think using appreciated stock for donations makes sense, because then they take on the tax issue that you would face selling that and using it goes away. And by the way, there's other ways. I mean, there's donor advised funds today. If the money's in a qualified account, you can do a charitable qualified distribution. So there's all kinds of ways to do this. But yeah, I think appreciated stock makes a ton of sense.
Okay.
I think that's
Thank you very much.
I think it's a great strategy. I really do. So
nice
thank you for giving the money away, helping people. No, I'm serious. You're laughing, but I'm serious. So
I know I'm not laughing. I said I thought that was great.
I'm going to a charitable thing tonight to try to give some more money away, because I haven't done enough this fall.
You have extra money?
No, I don't.
Can we talk?
Extra. First of all, no one has extra money ever. I always laugh.
No,
extra money.
no Bill Gates has extra money.
Well, that's true. By the way,
He does.
I didn't
He
finish
says,
my
let
Bill
me-
Gates.
Let me build some nice toilets.
Bill Gates is one smart customer. I haven't talked about this on the air. You know, the foundation has given away like $35 billion.
The Bill and Melinda Gates Foundation.
And it's never a couple blocks from here. Never had. It's higher than it's ever had in terms of the amount. You know why?
Because they invested.
They invest 60% of it's in stocks. Most foundations do not do that, as you know. Most of them they keep very safe. That thing's going to go a long. It still have over $100 billion in it. It's great.
By the way,
it makes sense.
By the way, I watched that documentary.
Which one? Inside Bill's Brain?
Inside Bill Gates.
Yeah.
Inside Bill's Brain.
I liked it.
What a great documentary.
Yeah. What was it? Poop,
it was really good.
Polio, and power. That was that's the way I looked at it, because that's what the foundation worked on. Yeah,
and I did not realize that Bill Gates actually has a company that is actively pursuing nuclear power.
Yeah, they had. If you saw it, they had the thing all ready to go in China, and then the tariffs blew it up.
And then tariffs
they've done so. I didn't. It's weird because we're right here. You think we'd know more about this stuff. I didn't know they had a sanitation plant that did everything without electricity and produced
the sanitation
water.
Plant was amazing.
Yeah,
that it created its own power.
That's right.
To create clean water.
I did write him, and I said it'd be better instead of creating water if it could create Budweiser beer. I'm in. Sign me up for the second round on that one.
That's the next step in the process because they've got enough extra energy that now they can start malting grain.
They showed Bill on the show. Remember him with the water?
Yeah, drinking the water.
Oh, come on. They ran up and poured a little bottled water in there, and then he drank it. No, he took it right out of the... Anyway.
We have a bonus half hour for you. We usually are done right now.
We'll come back and talk to Donna.
Half hour.
Yeah, Donna's waiting.
So we'll come back and talk to Donna and you too at 855-935-TALK, 855-935-8255. So stick around for a while.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And if you want to get Bill Gates or Jeff Bezos rich, we can't help you. Sorry, we can't make you a multi-billionaire. But if you want to manage your money a little better, if you want to get into real estate and investments as a small part of your portfolio, along with a really diversified portfolio, you want help managing your money, go to Vestory.com. That's our firm, and we're a fiduciary, 100% fiduciary firm. That's Vestory.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.